Yeah, let's go ahead and get into it. So the top 5 stocks that we're watching, if you guys have never been a part of Stock Watch Sunday, we do this every Sunday. We just give 5 stocks that we're watching for the week and give our reasons as to why. My first one this week is going to be Square. Cash App is why Square has just done so well this year, especially with the Rona and digital transactions and all that good stuff. It's finally pulled back to an area in which I think could potentially be a good spot to grab it at. Square's been something that I've been in and out of, made a bunch of money on it on the dips, and I think there might be another really good opportunity for Square. Ask me why, Fat Man Zoom.
Why?
Because Bitcoin almost went to $30,000 over Christmas break. It must be something
really?
about must be something about the stock market being closed, and everybody just wants to continue to trade. And so, I mean, we saw this with Thanksgiving too, where it reached all-time highs over Thanksgiving. Christmas was slow. Yeah, so Bitcoin actually hit over $28,000 over the Christmas holiday, and Square is directly invested in the Bitcoin. So 28,410.23. And I'll share my screen with you guys here where Bitcoin actually hit, and Webull had a sweet update. So whenever you're looking at cryptocurrencies, the candles are like a really cool color. I haven't changed anything. This is all default, but looks pretty sweet. But anyways, Bitcoin went crazy. Square's directly invested in Bitcoin. And you guys know that we've talked about Square as well as PayPal being invested in these and how it's impacted both of their stocks. So if you guys prefer PayPal, I don't see why there would be anything wrong with that. But you guys can see that Square's actually pulled back a pretty decent amount. I would imagine this opens up and probably opens up well into the green pre-market. So just be careful where you want to get into this at. I wouldn't chase it. But if you can still get into this under 230, I think that's going to be the play there. And if it runs without you, just wait. I think that we'll see a pretty decent pullback as well. Don't go chasing after this thing. Remember, this is Stock Watch Sunday, not Stock Buy Sunday. But I think that this would be a buy under 230 per share.
Yeah, it's like waterfalls. You don't go chasing waterfalls, and you don't go chasing Square, in the infamous words of TLC. So awesome pick. My number 2 stock is going to be GAN Limited. And we just recently brought it up. We brought it to the table. And the more I look into it, Brad, the more excited I get about this stock.
Yeah.
And I will tell you a couple reasons why. First, let me preface it by saying, for anybody who hasn't followed our channel, we love Penn. We're obsessed with Penn. We're bullish on the whole market as a whole, the whole gaming industry as a whole.
Yeah.
Penn's our lead dog on this. However, we realize Penn's a little hot. If you aren't already in it, if you're in it, we like it as a hold. If you're not already in it, I think you kind of wait for a pullback, look for an opportunity. I just don't know when it's going to come. Yeah. But GAN's a little bit lower of a price target, and I think it's huge upside. So what is GAN? GAN is basically a B2B company that builds online platforms, online gaming platforms for brick and mortar casinos. Huge need. So they call themselves the number one. I don't know how they equate that, but they're sort of the main dog in that. So if you're Win Casino, for example, they just signed a 10-year deal to build their platform for Win Casino, and they manage all the back end, and Win Casino pays them revenue. And as it grows in the market, they grow. So this is a great thing. As there's more volume on their gaming platform, they increase their revenue. So I think there's huge upside to this. One thing that I just found out about a month ago, they acquired a company called Coolbets, which gives them international exposure. So I just told you that they're B2B. Coolbets is B2C, business to consumer, and they have, I guess, so it's Latin America, Canada, hold on, I have Europe, Northern Europe, and that's it. So they're now getting exposure internationally, which they had none before. I love this acquisition. I think this is going to be a huge play into them potentially doing their own gaming in the future, potentially. So I'm really bullish on this company. I'm starting to do more and more research, and I'm telling you what, I'm really close to pulling the trigger on this thing. I think it's at great levels right now. I just need to learn a little bit more about it.
It is interesting to look at this and see like the channel that this has been kind of hanging around in between $14.76 and all the way up around $19.50 a share. If this breaks up above that $19.90, $20 area, we could see a really nice breakout. But man, if some of those catalysts that you're talking about end up continuing to grow, then yeah, I think GAGAN could definitely be a good one. And given the fact that this hasn't moved in the same type of fashion as some of the other gaming companies, even though this isn't directly related to gaming, but it's kind of like a just a I don't know what the term is for it, but it's just not exactly gaming itself, but a complement to gaming. That's probably why we haven't seen the same type of reaction, but I think that's why you like it so much. You can correct me if I'm wrong on that.
No, absolutely, you're right. And we like to, I mean, this is what we like to do. We like to catch things before the public gets a hold of them. This is a spec play. Let me be clear.
Yeah.
It is a spec play, so it could be extremely volatile, but these stocks we want to get in before the hype gets built up. And I certainly think we're going to see the hype of next year. I mean, Colorado just announced a record month. PA just in November, PA just announced a record month.
Yeah.
Tennessee just announced huge numbers in their first month, $131 million. Not only is the market going to double next year for legalized gaming, but, we talk about Michigan, but it's just, there's huge opportunities. Yeah. And I think we're going to see monster numbers, especially the first quarter with the Super Bowl and everybody being at home. It's going to be crazy.
Oh my God. And I mean, this is why we love the gaming industry so much. And why our top stocks for 21 was just the gaming industry in general. I mean, there's just we're so bullish on this space right now. It's just crazy. But anyways, great pick, man. My next one is going to be Home Depot, and really retail in general, but I went with Home Depot, and I'll give you a couple reasons why. Holiday retail sales, excluding automotive and gasoline, increased 3%. And this holiday season, according to tracking for MasterCard Spending Plus. So I did some research on there for you guys. Online sales were up 49% across the board for retail. An extended holiday period, which tracking ran it from October 11th to December 24th, which is another record setting type of season for online sales. And where home improvement falls in this, the home improvements sales are up 14.1%, with e-commerce sales up 79%. And analysts think that Home Depot and Lowe's have attracted new online customers through the pandemic that they are likely to keep, which has been a struggle for them. And so Home Depot, Lowe's, some of these other home building companies, we've seen a huge increase in online sales. Home Depot has actually come down some and cooled off to levels to where I think is actually an appropriate area to buy. So I'm looking here on the daily chart, and I think that Home Depot is a solid buy here at 270. It closed 270.92 on Thursday. And so I think that this is going to be a really good spot for Home Depot and Lowe's, and really just the retail space in general. But we're going to start to see numbers in January for how monstrous this fourth quarter was. And I think Home Depot definitely stands to benefit, not only just from this, but also all the other, things we've talked about as far as real estate and home improvement and all that good stuff as well.
Yeah. I mean, if you just go to a Home Depot, I think you can see.
Yeah, or Lowe's. Yeah, right.
What the hype's about.
Yeah.
Awesome. So my next stock, you actually guessed it before I sent it over to you today, is Alibaba, BABA.
Yeah.
I am so bullish on this stock. And for those of you who don't know what happened this week, Baba just tanked, went down over 20%. Here's what happened. So the Chinese government is basically going after them for monopolistic practices. And I think, so we talked about this when it happened last week. Really, Baba got the brunt of it. And if you looked at, it's Chinese tech stock. So when you read the headlines, the clickbait, it's Baba. Really, it's a bunch of Chinese tech stocks. So you look at JD, you look at Pinduoduo, Baidu, they're all a part of this, but Baba is sort of the lead dog. They're going to get all the exposure. So while the other stocks were down a couple percent, Baba goes down over 20%. It was insane. And it went down close to, like 210, maybe a little bit lower. But I thought this was a great opportunity. I thought this was a ridiculous overreaction. I think this was also coupled to the news in early November when the Chinese government, going after Baba, pulls the Alipay IPO, and that took a huge hit. Baba's over $300, rocking and rolling, and all of a sudden Alipay happens, which Jack Ma, who's the owner of Alibaba, they have a 33% stake in Alipay. Baba takes a hit because of that connection, and then this happens. So I think it's kind of like the hits keep coming, and it's a compounding effect. This is a great company, has over 50 some billion dollars cash on hand. If you compare it to Amazon, their margins are better, their revenue growth is at a faster pace, and they're tracking to really compete. I think they're moving in a little bit of a different direction.
Yeah.
But as of right now, just by the sheer volume that they can do in China, they're going to be a player for years to come. And I really believe they're still in their infancy as far as their growth opportunity. So I love Baba. I think this is a huge opportunity. And if this comes down to 200, I'll be adding to it, but I already established a position. I'm going to add this week, depending on the movement. I'm seeing if it could hang around 220.
Yeah.
But if it goes to 200, I'll add. And then if it moves up above 250, I'll probably add again. But I have a pretty defined strategy for this. But I'm working in a full position size. This quickly in a week became one of my top stocks for 2021 because I think it has the ability to run back over $300.
That would be amazing if that ended up happening. And I think that there's definitely a case that could be made because of the overreaction that it took, especially when you compare it to JD and others. My only question to you is, there's one caveat to this, and that is just the Chinese government in general, and the control that they have over Alibaba and some of these other ones. I just saw a headline here, and I don't even know the details. I just see the headline that says Ant Group ordered by Chinese authorities to refocus on payment business. And it's interesting that the Chinese government can just make them do that because we just live in such a free society that we can essentially do what we want within the confines of the law, but they are the law and they can just tell them to do it, and they have to. So is there any concern for you and for people watching that they can extend their arm even further with this, or do you think that this is something that's a little bit more short-lived and that there really isn't too much to worry about?
I think that it needs to be a part of the evaluation process.
Yeah.
Like, I don't think you blindly say, oh, it's going to be fine, no big deal. Certainly, I think that's something that we need to be aware of.
Yeah.
And that makes it a spec play, really, because you never know. It just could be the next thing. Look at our government, and somebody brought up Facebook.
Yeah.
J.O. said, Bob is pretty much reminding me of how Facebook is being targeted. The reality is that even though we do have a free market, our government still does things like this.
Yep.
And they're not as extreme as China. So, that manipulation can happen. So yes, I think that people should be conscious of it. It should reflect sort of their portfolio. I have much more confidence in Amazon as far as like holding it forever and full stake. Whereas Baba, I feel like I need to be on top of it a little bit more. However, it doesn't make me worry enough to not trade it, because if you look at what they're saying all the right things. And if you historically look at how we got here, it's so stupid. But right before the Alipay, Jack Ma, again, the CEO and founder of Alibaba, had made some critical comments of China.
Yeah.
And it feels like they're kind of targeting him.
Yep.
So my hope is that they can smooth things over, and then they'll no longer be in the crosshairs. But this is what the Chinese government does, apparently. And yeah, they do have a little bit more overarching control. But money still talks.
Yep.
And Baba ain't going anywhere, and I'm not worried about it. I'm not worried about Alipay. I think the IPO is going to go. I think that's going to be a catalyst. And then when this, maybe they'll pay a fine. Who knows what happens with this tech thing, but it's no different than what I feel like Google and Facebook and Apple, all these companies do with our Congress. It's just, I don't know, it's just a flex.
Yeah, I agree. I think I really, the only reason I brought it up is just because I wanted to make sure, or not make sure, but have our listeners kind of get that perspective as well, because I know that's something that is on your mind too, and not just to go into this thinking that everything's just going to be fine, just buy it because it's down here without thinking about that. So as far as the chart's concerned, to your point too, I agree. 210 seems to kind of be that spot where, at least on the weekly chart, I had to pull us out to the weekly because it's been so long since it's been down here. If we go to weekly chart, 209, 210 seems to be a reasonable area. But if it breaks through there, this looks like a really good spot here too at around 197. So just below $200 a share if by some chance this continues to get weaker. But man, if we have any kind of lightening of the pressure from the Chinese government and things just continue to roll, expect BABA to just really blast off. I think this would be a really big move, as Fat Man Zoom alluded to. So another great pick for me. My stock here, the last stock that we're going to watch this week or put on the watch list, is going to be Microsoft. And really, it is more or less of just a chart play. There's no catalyst specifically. I think when you look at the Santa Claus rally in general and just kind of if this is going to happen, then these are going to be the stocks that run. And there's an array of ones that we can choose from. Home Depot was really on that list because I was also kind of looking at this as a potential Santa Claus rally type of stock. But Microsoft is very much in there. We talked about how you and I were just playing Call of Duty and we were playing it on our Xboxes, which is also Microsoft. And I'm sure that there was millions of other Americans that were doing the same things over the Christmas holiday. When we look at the chart here, I think that this is going to be one that could really make some really nice moves. We're reaching a point to where we're starting to break over resistances yet again. We come back out here to a daily chart, and you can kind of see where this is up to around 225. And if this breaks back up over 225 this week, we should really start to make moves again to all-time highs of around 230. Let me come back out here. 230, 286 was its most recent all-time high. And so this is looking to be really bullish. If I start to draw some trend lines here, you can kind of see where my perspective is. Come down here to around 195, and it hasn't really slowed down since. It hasn't come back down, and it continues to remain bullish. And you could almost make an argument for a potential rising wedge here if I went and drew this out even more. So I think that with Microsoft, it's more or less a pure chart play. And the nice thing about Microsoft is that there's little risk involved. You can look at this chart and be like, all right, this is super bullish. It's Microsoft after all. Might as well look to see for opportunities to get in. For me personally, I like this as a potential dip grab. If it comes back down below 220, it would definitely be a buy for me. And if it does end up breaking over 225, you probably would want to get in on some momentum here, because I think that could show some signs of a true breakout for Microsoft.
Man, I love Microsoft.
It's the best stock in the world. One of the best stocks in the world. It's one of the best stocks in the world.
Yeah, and I would make the argument it's like, out of all the big dogs, it's the most underrated.
Yeah.
And I don't know, man. I agree with you. I'm glad it's finally starting to move. It was kind of like around that 200, 210.
Yeah.
But Microsoft, it's got great leadership. They've got great margins, great cash. Their fundamentals are solid. They're more valuable than Amazon. I don't think people realize that, but which won't be for long. I think Amazon will get back ahead of them, but that's what we're talking about. I mean, they're one of the most valuable companies we have, and somehow they get forgotten. But great stock, definitely one to consider in your long-term portfolio for sure. But even short-term, looks like it should be making new all-time highs.